Good morning, I'm Bea Rose Santiago, sitting in for Mike Ureta, and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and insights you need to navigate, adapt, and lead. Let's dive right in. Government infrastructure spending opened the fourth quarter on a weak note. With flood control scandal continuing to weigh on October disbursements, the Philippine exports of semiconductor and electronic products are projected to grow by double digits this year. The country's biggest business group calls on the Bureau of Internal Revenue to ensure fairness in issuing letters of authority. And the U.S. President Donald Trump says talks to end the Ukraine war are in the final stages. Philippine infrastructure spending fell for a fourth straight month in October as DPWH disbursements declined amid a corruption scandal and adverse weather. Data from the Department of Budget and Management showed infrastructure and capital outlays dropped 40.1% year-on-year to 65.9 billion pesos, also down 16.2% from September. The DBM said the slower budget release for public works stemmed from contractor payment delays due to tax clearances and license issues and weather-related disruptions, with the DPWH at the center of a kickback allegations. The Philippine exports of semiconductor and electronic products are projected to grow by double digits this year to $48 billion. Dan La Chica, president of the Semiconductor and Electronics Industries in the Philippines Foundation, says it's not a slam dunk, but it is on a trajectory. He adds it is higher than 2024, and he hopes it is comparable to 2023 levels. If the $48 billion projection is realized, it represents an almost 23% growth from last year's total, faster than SAP's 5 to 7% growth estimate last month. La Chica says the optimism is driven by higher demand for semiconductors and electronics for artificial intelligence, Internet of Things, and electric vehicles, among others. As cashless payments gain ground, digital banking competition is picking up. The Bangko Sentral ng Pilipinas receives 3 applications for digital banking licenses. This follows the lifting of a 3-year moratorium in January 2025, with the BSP opening 4 new license slots. At present, only 6 digital banks are licensed and operating in the country. New entrants are expected to boost competition, expand digital transactions, and improve services, offering Filipinos more choice, convenience, and better rates once approved. Philippine banks expanded lending to agriculture through the third quarter, extending about 2.5 trillion pesos in credit, exceeding the government-mandated quota for farm sector loans. Data from the Bangko Sentral ng Pilipinas shows this is up 45% from a year ago, covering farmers, fisherfolk, and agrarian reform beneficiaries through compliance is lower than last year. Banks say risk from natural calamities and borrowers' limited access to loan securities continue to challenge agricultural lending, highlighting the need for guarantees and crop insurances. Congress is set to ratify today the bicameral committee report on the 6.8 trillion peso national budget for 2026, after lawmakers signed a measure on Sunday. House and Senate leaders said the budget was produced through the first open bicameral process and will be uploaded in full on Congressional Transparency portals after ratification. Once approved by the Congress, the measure will be sent to President Ferdinand Marcos Jr. for review, with the executive targeting a January 5 signing. The delay means the government will operate under a reenacted 2025 budget for the first few days of January, after talks were stalled by disagreements over the DPWH budget. The Marcos administration said it has protected the poorest Filipino families by keeping inflation low and supporting economic growth in 2025. Government data showed inflation eased 1.6% from January to November, down from 3.4% in 2024. The price stabilization efforts focused on food, especially rice. S&P Global Ratings cited the low inflation environment in reaffirming the Philippines' BBB+ credit rating, as multilateral institutions project GDP growth is of about 5% for 2025. Today, we're joined by Jonathan Ravilas, Senior Advisor at Reyes, Tacandong and Company, to talk about the Philippine economic performance in 2025, including low inflation, strong growth, and government intervention measures that have directly impacted household purchasing power. Hi, Jonas. Welcome to Business 360.
Hi, good morning, Bea. Good morning to your listeners.
Thank you. Given the sustained low inflation of 1.6% in 2025, how realistic is it that this trend can continue without stifling investment or wage growth?
Okay, I think on the short term, we could probably see inflation stabilizing at probably still below the 2%. But moving forward, over the medium term, I think that it will be a challenge, especially with a lot of global issues like El Nino, and then, of course, climate hazards, and, of course, oil spikes, which are probably generated through geopolitical risk. So, most likely in 2026, we will see that inflation would probably rise above 2%, probably towards 2.3% for the full year 2026.
Let's talk about the rice. With rice prices falling to 20 pesos per kilo under government intervention, could this risk creating market distortions or dependency among farmers?
Okay, that 20 pesos is selected area. So it's not probably nationwide, but it's actually a good push. So sustaining the low prices is going to be a challenge. Again, what we're seeing really is more of two-prong. We have monetary policy, meaning the BSP slowly bringing down interest rates to help support business. And at the same time, we have non-monetary measures done by government. So one of them is, of course, the Rice Tarification Act. And then, of course, some interventions to eventually support food productivity. So it's working, but the question is it sustainable? So the challenge really is we continue to keep investing in agricultural facilities and support in the making sure our farmers are able to improve productivity over time.
How significant is the role of government-led price stabilization in driving consumer confidence versus the underlying private sector dynamics?
Okay, I think what we saw, the intervention that we saw was really coming from a high in 2022, where inflation was almost 6%. So eventually there was a real need to eventually do two things. One, create the necessary infrastructure to be able to bring down prices. So it's a two-pronged strategy. So one was these interventions that they've done. The other is to help the farmers. So as long as we continue this two-way of trying to ensure that we can keep rice prices, we could probably still see a very conducive local market. Why am I saying this? Because effective in 2026, we're slowly raising the tariff on rice from 15 to around 20%, if I'm not mistaken. So this actually will balance the productivity that we're seeing locally on better harvests, and that will mean lesser import. So that is actually a good sign that our what I call a bibingka strategy is working. Bibingka strategy is there's a fire on top and there's something that fire under. So we're doing it two-pronged.
Yes. Mr. Jonas, the bottom 30% of income households saw a negative 0.2% inflation rate in November. Does this indicate deflation pressures that could affect economic growth?
Well, basically, I guess one of them is that it's really more of the high base compared to the prices last year. Rice prices were significantly much lower, but also it could also mean that the challenges brought about by floodgate and the rising unemployment also brought down people to not really spent. And this is something that uh, what the BSP has already highlighted in their business and consumer survey, that there is a divergence. Meaning consumer sentiment is positive because of the low inflation, but because of the trust issues in government, business climate is has soured.
How credible are growth projections of 5 to 5.1% given global uncertainties such as the inflation abroad, supply chain risk, or the geopolitical tensions happening right now?
Okay, the 5 to 5.1% truly reflects the concerns of what happened in Floodgate. So prior to Floodgate in July, most of the forecasts are between 5.5 to around 6%. And my adjusted forecast for next year is still a bit optimistic at 5.3%. Hopefully that the government will ensure that the trust issues will be addressed. Primarily, this is transparency and accountability, and eventually ensuring that government spending is well tracked and everyone is accountable for it. So hopefully the 2026 budget is a much better prepared than what we saw from 2025.
Let's go back to the BSP. With the BSP having more policy space to adjust interest rates, could lowering rates too aggressively fuel asset bubbles rather than real household consumptions?
Well, rest assured that there are no asset bubbles. The market prices today are practically a bit lower. Again, there are many factors that have brought down prices. The other thing that the rate cuts that everyone is looking at is to eventually help restart the economy, especially after hitting a 4% GDP growth in the third quarter. This is something that we haven't seen since second quarter of 2023. But if we look at it from a longer term period, this was the lowest since 2011. So bringing down interest rate is something as a sort of appetizer for investors to start investing again. You have to understand that the situation of floodgate is like a person having a toothache, and it's very difficult to eat, especially during the holiday if you have a toothache. So addressing the key issues of the toothache, which is transparency and accountability, will ensure hopefully your appetite will be back, and bringing down interest rate could be a very good appetizer.
But how sustainable is the current economic performance if it relies heavily on government intervention and targeted support programs?
Okay, that's a very good question. You have to understand that the Philippine economy is 70% driven by consumer spending. And as long as everybody spends, we have a good indicator, which is consumer confidence, which is already signaling that they're willing to start spending again now that inflation is well controlled. The problem is the business sentiment. People are hesitant to spend because the business climate is not there. But once people and consumers confidence is very important, because especially for households, once they start feeling comfortable to spend, that is actually a very good signal for business to further expand. But one of the other indicators that business look at is the beginnings of government spending, particularly in infrastructure, so that there is a slight push in the economy that will accelerate business sentiment. And that's what was absent in the third quarter of 2025.
While the Philippines outperforms most advanced economies and other Asian peers, are they structural weaknesses in the economy like reliance or remittances or limited manufacturing that could undermine this growth in the medium term?
Okay, so you have to understand, if we look at where our revenues come from, one of them is OFW remittances, and they're really being threatened by some of the policies of the U.S., which limits undocumented people to send money. If they send money, they will be sort of tariffied, meaning there'll be a fee that they need to pay. So that threatens our remittances. We're just happy that electronic exports was able to uh, get that zero tariff, and that will help boost. But again, competitiveness is another issue. The third is the BPO sector, which continues to remain buoyant, but there are risks on the part of uh, companies, American companies that have are if there is that bill that is being passed, could eventually bring the BPOs back to the US, and that is a risk. We've seen recently JP Morgan and Amazon cutting people globally.
Yes.
And this is, again, an effect of AI. So there are a lot of risks aside from domestic that could really affect. And that's the reason why most of the forecasts are in the low fives. If we were able to see strong consumption, improved business sentiment, then that could rise to 5.5 to close to 6%.
Another question. President Marcos's trust rating declined in November as VP Sara Duterte's rating improved. What are your thoughts on this?
Oh, well, basically, I think one of the most important things to consider is that the people are waiting for the president to really deliver the bacon, no? Meaning somebody needs to be accountable for all of these floodgate issues. And that is what everyone is trying to uh, wait. And until such time the president delivers that, his trust rating will remain on the lows. And of course, he needs to be able to recover from this by doing, again, accountability and transparency. He has already created steps to ensure that the trust restoration is in progress. The question is, we all want somebody to get jailed. So this is eventually what's keeping his ratings down. But if we were to look at on other fronts like inflation, then the president actually has a very good something to brag about because he was able to bring down inflation over the last 3 years.
Before I let you go, Mr. Jonas, what is your economic outlook for the first quarter and the rest of the 2026?
Okay, I think for 2026, we're currently looking at around 5.3%. We are hopeful that we'll probably be back to over 5% in the first quarter. Again, this is something that's quite hopeful. Hopefully that the government will eventually bring back the spending that is much needed to be able to restart the economy. But again, you can lead the horse to the water, but you can't force it to drink. So what we're expecting probably the BSP to cut policy rates. We're seeing the government doing all the necessary intervention, but the problem is it's really all about the trust issues. But once these trust issues are there, definitely we could see something better. What are those signs? If we get to see public private investments, private companies, especially those that are listed, being able to do infrastructure projects, then that is a show of confidence in the Philippine economy. And that's what we need to look for in the first quarter of 2026.
Thank you for joining us, Jonas Ravilas, Senior Advisor at Reyes Tacandong and Company.
Thank you, Bea, for having me. Happy New Year.
Happy New Year. We're taking a quick break. Stay with us as we dive into the numbers and the stories that matter most to your bottom line. Welcome back. Let's check on how global markets are doing this Monday morning. U.S. stock futures were flat on Sunday as investors look to end the year on a high note. The Dow Jones Industrial Average Futures, S&P 500 futures, and NASDAQ 100 futures were about flat. Last Friday's stocks ended slightly lower amid light post-Christmas trading as all three major indexes snapped 5-session winning streaks. In Europe, major stock markets ended Friday mixed, with London's FTSE 100 losing 0.2% and Germany's DAX gaining 0.2% and France's CAC 40 flat. Climate change is increasingly hitting the Philippine economy with stronger typhoons and governance issues amplifying the risks. The International Monetary Fund says typhoon damage already cost the country about 0.2 to 0.3% of GDP every year. Without stronger adaptation, losses could reach up to 2% of annual GDP, dragging down long-term growth. Climate shocks also drive inflation higher, hitting agricultural and pushing food prices up. Shockwaves hit the Philippine renewable energy sector as the Department of Energy terminates 84 contracts for non-performance, including major projects by SP New Energy Corporation. The move comes just about 2 months after Batangas 1st District Representative Leandro Liviste sold billions in SPNEC shares to Meralco, fueling speculations he's cashing out ahead of contract terminations. The same day of the DOE announcement, Liviste also dropped so-called Cabral files on social media, claiming a crusade against corruption, but critics say the timing looks like a panic management. Investors now watch closely. The largest clean energy promises in the country are at risk, while SPNEC's founders pivots to political amid mounting scrutiny. A fairer approach to tax enforcement, the Philippine Chamber of Commerce and Industry calls on the Bureau of Internal Revenue to ensure fairness and issuing letters of authority. The move comes after the BIR chief suspended all LOAs and field audits and a Senate probe into alleged abuse and money-making schemes within the agency. The PCCI welcomes the creation of ABIR Private Multisectoral Group to strengthen government-business collaboration and promoting reforms that boost transparency, accountability, and taxpayer protection. The initiative underscores that tax enforcement must strike a balance between firmness and fairness, preventing abuse and restoring trust in the Philippine tax system. Trading at the local equity markets has opened, so let's look at the initial figures. The Philippine Stock Exchange Index is flat with a downward bias trading at 60.64. The sub-indices are mixed, with advancers outpacing decliners 92.52. So far, value turnover has reached 302 million pesos. On currency front, the peso opened at 58.68 against the dollar, up from its previous close of 58.71. Retired U.S. Air Force Colonel Ray Powell says the United States should visit the civilian population on Pag-asa Island in the Spratly Archipelago to show support amid China's claims. He notes the island has a runway and is accessible by aircraft, making it feasible to conduct medical and civic action programs alongside Philippine partners. Powell adds that the U.S. Senator should also visit Pag-asa Island to reassure locals that the United States stands shoulder to shoulder with them.
People should go and visit the civilian population at T2 Island in the Spratly Archipelago. I've studied the South China Sea for decades, and I can tell you that we have, as the United States, avoided that because we have not wanted to sort of throw in our lot with any one claim on the fear that we'd have to sort of try to then be forced to adjudicate all claims. But there is a civilian population at T2 Island. There is a runway. You can easily get there by aircraft, and it would be a tremendous show of support for a population that wakes up every morning and sees dozens of Coast Guard and maritime militia ships, not just on the horizon, but right there just a couple of nautical miles away from their shores, reminding them that China believes they own that island and is coming for it eventually. So because China is pressing that claim, I believe it would be very helpful for the United States not only to conduct medical civic action programs out there, bring out some military doctors and engineers, work alongside our Philippine friends, And frankly, U.S. senators should go out there and visit and remind them that we stand shoulder to shoulder in a very, very real way.
Syria takes a bold step to stabilize its economy as it prepares to replace old banknotes with new ones starting next year. Decades of war and sanctions have left Syria's economy battered and the pound severely weakened. The government moves to replace Assad-era notes and cut 2 zeros from the old currency, aiming to restore the public confidence, rebuild state institutions, and strengthen the Syrian pound. Some bankers warn the reform could spark inflation and further erode purchasing power for ordinary Syrians already struggling with high prices. Ukrainian President Volodymyr Zelensky meets U.S. President Donald Trump Sunday to discuss a plan to end the war in Ukraine. Both leaders indicate that a U.S.-Ukraine security agreement is near completion, though Trump says a few thorny issues around territory remain. Trump speaks with Russian President Vladimir Putin earlier in the day as talks continue toward a possible resolution. And that's it for Business 360. I'm Bea Rose Santiago. Thank you for joining us here, and keep it hard on BNC Bilyonaryo News Channel.